Anti-Money Laundering, AML, compliance in European financial data spaces. To address the growing concern of illegal activities involving the movement of funds across the global financial system, governments and international organizations have implemented stringent regulations and laws to combat money laundering. One such essential framework is anti-money laundering, AML compliance. In this tutorial, we will explore the concept of AML compliance in the context of the European financial data spaces. Understanding money laundering. Money laundering refers to the process of concealing the origins of illegally obtained funds, making them appear legitimate. The proceeds of criminal activities, such as drug trafficking, corruption, fraud, or tax evasion, are funneled into the financial system, making it challenging to trace their illicit source. Introduction to Anti-Money Laundering, AML. Anti-money laundering, AML, encompasses a set of policies, procedures, and regulations designed to prevent and detect money laundering activities. AML practices aim to ensure that financial institutions and businesses implement robust measures to protect the integrity of the global financial system. Role of European financial data spaces. The European financial data spaces act as a crucial hub for financial transactions, making it imperative for the region to establish effective AML compliance frameworks. By integrating data from various financial sectors, including banking, insurance, securities, and cryptocurrencies, the European financial data spaces enable comprehensive monitoring and analysis to identify suspicious activities. Key elements of AML compliance. A risk assessment. Financial institutions must conduct a thorough risk assessment to identify and understand the potential risks associated with money laundering. This assessment helps institutions establish appropriate policies and procedures tailored to their risk profile. B. Customer due diligence. CDD. CDD involves verifying the identity of customers and assessing the risks associated with their financial activities. It includes elements such as Know Your Customer, KYC, requirements where institutions collect customer information, verify identities, and monitor transactions to ensure they align with expected patterns of behavior. C. Transaction monitoring. AML compliance requires financial institutions to implement robust transaction monitoring systems. This involves the continuous monitoring of customer transactions to identify suspicious activities such as large and frequent cash withdrawals, round-trip transactions, or transactions involving high-risk jurisdictions. The suspicious activity reporting. If financial institutions identify any suspicious activities during the course of transaction monitoring, they are obligated to report them to the relevant authorities. Suspicious Activity Reports, SARs, provide a mechanism for reporting potentially illicit transactions, allowing authorities to investigate and take appropriate action. AML laws and regulations in Europe. The European Union has established comprehensive AML laws and regulations to combat money laundering effectively. The 5th Anti-Money Laundering Directive, 5 AMLD, introduced several provisions including the requirement for enhanced due diligence for high-risk countries, the expansion of beneficial ownership registration, and greater cooperation between European Union member states. Technological tools for AML compliance. To cope with the evolving nature of money laundering, technology plays a crucial role in AML compliance. Financial institutions are increasingly adopting advanced analytics, artificial intelligence, and machine learning solutions to enhance their ability to detect suspicious activities and minimize false positives. Challenges in AML compliance. Despite the efforts to combat money laundering, AML compliance faces certain challenges. These include the constant evolution of money laundering techniques, the complexity of cross-border transactions, and the need to balance AML regulations with customer experience, privacy, and data protection. In conclusion, AML compliance in European financial data spaces is of utmost importance in ensuring the integrity of the global financial system. By implementing robust AML frameworks. Financial institutions can contribute to fighting money laundering and illicit activities effectively.